Thank you so much. So now we're going to move on to the next one, which is going to present a discussion on real estate investments, comprising of residential, commercials, and opportunistic investments. So let's welcome the moderator on stage, Hetal Kotak, Director, South Mango Advisors. Let's put our hands together for Hetal, who's an astute retail brand and business management professional with over 25 years of industry experience. We welcome you over here, and it's amazing to have you over here. Along with Adil, we'll have the speakers in alphabetical order. Let's put our hands together and join in to welcome Abhijit Banerjee, co-founder and partner, Upwisery. Abhijit is the co-founder and partner at Upwisery, a multidisciplinary professional advisory and financial services firm with $1 billion funds raised across various asset classes in real estate. We welcome you, Abhijit. It's good to have you here. Joining Abhijit on the speaker panel, let's put our hands together for Adarsh, Narahari, Managing Director, Primus Senior Living, is a pioneer in conceptualizing and creating luxury communities for seniors in India. Brainchild of Adarsh, Primus represents his entrepreneurial spirit and passion. Welcome. It's amazing to have you here as well. And to join them on the panel would be Adil Engineer, Managing Partner, Credberg Advisors India Private Limited. Adil is an experienced partner with a demonstrated history of working in the investment banking industry, skilled in negotiation, valuation, corporate finance, due diligence, and business development. Let's put our hands together for Adil Engineer. Also, let's make some noise and welcome C. Lakshmipathi, Managing Partner, South ASK Property Investment Advisors. Lakshmipathi joined ASK in 2009, that's some time back, and is part of the core team. He spearheads fundraising, deployment, and investment management of the real estate funds in South India, and currently manages a portfolio of INR 6 billion across 8 million square feet, including 6,700 residential units across South India. That's massive. Lakshmipathi, good to see you. Good to have you here. Joining them would be ST, Prashantha, Kumar, Senior Panel, Fox and Mandal. With over 20 years of legal expertise, Prashantha has steered the firm's real estate and infrastructure practice in Bengaluru, Mumbai and Pune. He has extensive experience in structuring the acquisition of rights, titles and interests in immovable properties, including commercial, residential and plantation or agricultural land. Prashantha, let's get going because all of us are here and I'm sure it's going to be insightful and amazing. Thank you. Have a great one.
Post-lunch session, the difficult part was done by the panel before us. We are going to make some noise, yeah, so it's going to be sound of money. It's about investments, an esteemed panel here. So just getting started. So first question, just for us to warm it up. Thereafter, it's all up to the people to make it engaging. All of us need to engage. That's the idea. So which is the most exciting space which the panelists see, which is whether it's residential, commercial, or is it opportunistic? What are the views on that? Maybe just to hear from you.
I think we are in an era where everything about real estate is so in the next 10 years, we were just discussing that we are at a cusp where the Indian economy is going to triple. This is something that our previous generation has seen, not the next generation will see. So we are at a cusp where every asset class within real estate will go berserk. Just to give you a very small example, at the max what we are selling in India today is about 5 lakhs units, residential units. This means about 20 lakhs people we are trying to house every year, which is the highest we have achieved so far. Even if we continue doing this for the next 50 years, we are going to house not more than 8-10 crores. It's just 8% of our country. So the size of the opportunity and the excitement is way high. So, and that of course will have an impact on the commercial and other asset classes as well.
So I have a huge bias to answer this question, right? Because I do senior living in elder care for a living. So obviously,
I can rephrase the question if you want.
Sure.
Yeah. So that includes the emerging segment like senior living and co-living also. Happy to have those views.
So I have all my eggs in the senior living basket. So needless to say, I think that holds great promise and potential to grow. Just the fact that there's this huge upper middle class, elderly with disposable income whose kids may or may not be living with them, and who's now choosing themselves as the priority as opposed to choosing somebody else. So that large base of people with good disposable income, I think, is a great opportunity. And of course, real estate on a whole is a great opportunity, which my esteemed colleagues are in a better position to answer.
Hello everyone. I think right now real estate in India is at its absolute zenith. I don't think there are more exciting times in the real estate industry. The real estate industry by 2030 is supposed to touch $1 trillion, which is fantastic. We are actually in a stage today for the first time, or after a very long time, where residential and commercial real estate are booming together. Normally it used to always be counter-cyclical, one would boom while the other would go down. This is the first time in a long time that we are seeing both really booming at the same time. And I think this bull run is going to run for at least another 5-7 years, if not more.
Thank you. I've been in Indian real estate for last 25 years. In a cycle of real estate which typically lasts 4 to 5 years, this is one excellent cycle where we are seeing 4 important events. Highest supply, highest absorption, lowest inventory at highest prices. These 4 things falling in one place is a very, very difficult event which has never happened in the past. So we strongly feel that Indian real estate will go into a level of $1 trillion. Not only that, Indian reality index, which was X, let's say X 7 years back, is already 3X. And the top 50 developers are already contributing 28% in this current market. The consolidation will help them to grow to a level of 50 to 60%. So, in terms of foreign inflows or the total private equity investments in this country, we would put about $40 billion is already invested in the real estate space, say 50% in resi and 60-65% in office, and the rest of the asset class would contribute 20-25%. We expect this flow to go to a level of $100 billion in the next 5 years. So we are in a very amazing sphere of growth. I think it's a collectively with structural reforms, structural changes, regulations falling in place, we are at an excellent time, and this is a very opportunistic place to be in. We are extremely excited to be in this market.
Hi, good afternoon. Very beautiful question from the moderator. Opportunity, real estate, India, money. Today, aren't we in a most vibrant times? I always compare real estate with human evolution. Human started. If you see that, the aspect of real estate lies in the entire human cycle. When we take a birth, you take a birth in a hospital where there is an element of real estate. You study from your play school to college, school, there is an element of real estate. Once you are done with your studies, you will go to office, there is an element of real estate. Okay, you will get married, there is an element of real estate, but anyway, you will get married in a convention center or a hotel or wherever you are. And thereafter, you are leaving. Till entire human cycle, there is an element of real estate. And the times where we are living today, and Indian market, as you know that actually we have 1.4 billion economy, the most vibrant population in the world, the most vibrant, and the amount of companies, especially from the other sectors, who are trying to get into Indian economy and do business. If that is the scenario, why not real estate? I was recently speaking with some of the industrial leaders. When Hindustan Unilever, when they wanted to actually excel or penetrate more, they come up with the concept of, these shampoo, soaps, everything. They reduced the size, they started coming up with small sachet and all. And their penetration into the Indian market today, see where they are. See, that's what actually, the fortunes lies at the bottom of the pyramid. Today in Indian industry, when it comes to the real estate industry, I feel there is a absolutely a super market that's going to be there. To serve 1.4 billion population is not a joke. And you have a greatest of great opportunity. It's a gold rush as far the Indian real estate markets are concerned.
That was a very buoyant one. While you're talking about bottom of pyramid, I'm sure we all have been consuming the data across multiple medias. That premium is rolling right now across all segments, right? Luxury and premium is rolling in every segment in the country, and that's been an exciting journey also. These days, premium is selling more than the value segment. That's what it is. Coming back to this space of investments, there is you have family offices, you have equity players, you have institutional investors overall. Question maybe Pati to you. Prashant, you also may chip in. Where do you see equity coming in? There has been debt as a funding model, as an investment model available, but equity play in real estate, where do you see that?
See, there are two opportunities. Domestically, the money comes from the ultra HNIs and family offices. The domestic institutional investors are yet to join the play. They are largely into the pure debt side. The private equity funds, which you can classify as the Cat 1, Cat 2, Cat 3 AFs or the erstwhile PMS, PCF, all put together are the only opportunities available for the land acquisition stage play. Even they are quite holding back pure vanilla play because of the new emergence of the multiple opportunistic play which is available in the market. The foreign players, the foreign institutions which are entering in the market are looking at land opportunities, but they have become very smart. Thanks to their past experiences, they have taken significant haircuts. Now they have changed the structure into a pure debt model. They are saying that the foreign institutions who are investing in Indian real estate purely on the residential side, the non-residential side is a yield play, so they are very comfortable there. 6, 7% or 8% yield, they are very comfortable on that portion. If you are looking at resi play, the money for pure vanilla is not going to come. It's going to take a lot of time to go back to that stage. Today I'll give you an example. Why should a private equity will not put in money at a pure land play? Roughly about 800 odd cases are in insolvency. I'm talking only real estate. I'm sure Prashant will subscribe to these numbers. So if you put a ballpark number, so this 800 thing is an opportunity of $10 to $15 billion. So a $10 to $15 billion money is required to revive these real estate projects. What are these projects? These projects are fully approved, some sale done, construction established, price markets established. So when you have an opportunity to play around $10, $15 billion, so this is a play which people are looking at. So the domestic money will continue to be raised from domestic institutional investors will not enter. They are still in debt market. Ultra HNI and family offices money. That's what we have been raising money from. And the offshore money will come again from family offices and significant pension funds, institutional investors, but they will focus more on the identified asset or a mandate of managed asset or an office. I think this is the trend which will continue for some more time.
Adil, step in here. The equity money that you see will come in only predominantly in office. Because like Pati said, it's the yield chasers that are coming in and putting in equity to buy core. Build-to-core strategies are also there where again equity is coming in, but with tie-ups with developers. So large sovereigns, large fund houses from across the world are putting money in with large developers to go out and build to core together. That's where the equity is coming in. Also, you're seeing equity now coming in the new age industries like data centers, etc., where capital intensity is huge. And India being a completely booming market right now in data, you're finding a lot of these people coming in and putting in equity even at land stage to buy data center plots. And 2-3 places in the country are predominant for that, which is basically Chennai and Mumbai to a certain extent where there's landfall of cables. But you're also finding that a large number of data centers are coming up for cloud. And here again, it's the large institutions who are in cloud, who are willing to put in equity to buy land and develop their data centers right out from land stage itself.
In addition to whatever my designated panelists said, yes, one is an equity, second one is a segment. When it comes to the equity, I do agree that a lot of equity either from the foreign and as well as the domestic. So we are today is the equity sufficient. We don't have any deficit equity. We have actually a surplus capital as per the domestic capital is concerned. Second thing is equity. As I said that when I said that from the bottom of a pyramid. See, I want to say here the prop tech. Today, if you see how the prop tech is working is, you create some LLP structure. You call for some of the equity players who will come and join you as a partner. You have this platform and that platform will start investing. Here it is actually how you are consolidating your domestic equity. The money which was not earlier available, today it is available for the investments. Here in the name of PropTech, I think we are able to consolidate and invite good amount of money which was never called for real estate investments.
Yeah, so I fully agree. So most of the equity money that has come in from the big sovereign funds and others, about 29 to 30 billion has come in since 2019. And of which about 70% has been in commercial office spaces. And these are not greenfield projects, many times they are re-tenanted, already built and leased properties. And a small part of it has also come into warehouses. And today the situation is such that there's more money waiting, but there are not that many quality assets to be taken. So that's the situation.
Thank you. The other thing was about opportunistic segment of real estate investments. And how are we all seeing the segment in terms of, to me, opportunistic is the typical high growth, high risk model. Yeah. Which space is emerging, which city, which location, what's been your observation on that? And is investment available for that kind of segment in terms of our investors really interested? What's been your observations? Anyone who wants to go?
Can I start with this?
Yes, please.
Because when you come down, I wanted to discuss, tell you a lot about the segments are concerned. As I told you that real estate, it has evolved with human evolution. But of late, what I see is there is a lack of innovation as for the real estate segments and the real estate products are concerned. I will take you the classic example of Bangalore. I have been telling, past 1 decade, I have been telling a lot of people, can you think something different? See, we are going ahead with the same stereoscopic development. Apartments are hybrid structure, commercial apartments we are doing. Now, slowly people started actually going beyond that comfort zone and started doing something new. Resort plotted development. And I will give some. But what I need is we as a Bangalore. If you see that Bangalore is an organically grown city and it is known for its green and weather. Beyond that, we don't have a beach here. How to attract the people here? The one is. The second one is what kind of a products that we have to give so that the most of the talents will stay at Bangalore. Today, everybody think of global mobility, and once they are educated, they want to go out of India, out of Bangalore. So many things are there. What is that Bangalore has so that it will attract other people and come, they stay here, other than the natural thing that is weather. When you ask, people say that we love Bangalore weather, we love Bangalore culture, and we hate Bangalore traffic, but still we love to be here. So weather and the culture. Beyond that, as a product, what is that something new? Are we thinking of some downtowns, creation of downtowns in Bangalore? The answer is still we need to search for it. No such proposals are there. Are we thinking of some destination mall? Answer is not there. Are we thinking of some entertainment cities, sports cities? What is that we are thinking? Here, one is the business call, second one is the risk. Whether anybody is take that kind of a calculated risk. Because I suggested most of the people with whom I work, why don't you think of some destination malls, where people will go in the weekend, stay there, have everything. You can have cinemas, you can have pubs, you can have some brewing companies, plus some activities, theme park and all. So far, Bangalore has not got the best theme park. So far. So there is a lot of potential and lot of innovation need to be there. That's what I believe.
So I'll take the liberty to a little bit rephrase your question.
Yes,
So I think the opportunity is so large that we don't need to be opportunistic in this sense. If you see last year in the entire 12 months, India absorbed about 38 million square feet grade A office spaces. This year, in the last 9 months, I think we are already close to crossing it. Bangalore last year sold 49,000 of residential units. Today we are already at 47 in 9 months. Hyderabad is at 24,000 square feet. So the opportunity is so much. And coming to the population, I mean, though we have a large population, but the purchasing power is kind of limited to that 8-10% who are about the $15,000 income. So about the 8-10% people control half the size of the India's economy. And they are living in the 10-15 cities of India. So if we are able as developers, as lenders, as middlemen, are able to cater to just this 15%, 15 cities of India, we are catering to half India's population, and those are the cities where the office spaces, residential malls, everything that is state is coming. So it's a very concentrated opportunity.
So the thought is not debating at all on the opportunity available, but it's about the opportunistic segment, and my understanding that's the high risk segment. Now, what are the opportunities we are seeing in a high risk segment? The opportunity in general, grade A office spaces, etc., continues to be a large proven opportunity, I'm saying. But have we seen the emergence of larger high risk opportunities where, let's say, it's a project which is looking like, it's dead, and then somebody comes in, redoes it, takes it to the next level, and it builds a sustainable business model?
We completely see this in the recipe. I think last 5 years, we have seen this is a very important one, particularly after the introduction of RERA. RERA has helped consolidating the industry. And if you see our typical play, we look at two critical opportunities for investors. One is recapitalization. After the NBFC crisis, the monies available to the real estate side are very less. In the sense that the erstwhile NBFCs who had lent money for the land acquisition at a 2022's range are not able to fuel in additional money to complete the project. The project is stuck. For some reason, project approvals are delayed. So these projects, to recapitalize, the existing lender needs to be moved up because he is under pressure, his timelines are over. So we look at that opportunity very strong to replace the existing lender, to put in adequate money in the project, ensure financial closure, and complete the project. Today the developer post RERA wants to secure his brand. Okay, this consolidation is helping them to ensure that to complete the project. So we provide that solution capital. The second opportunity, what you say, which is again emerging because of the consolidation, is the acquisition of distressed assets. A low-run developer who has lost the project is defaulted with a lender, is going through the court settlements, and we are able to acquire these assets. We have acquired multiple assets with the new developer partner, which is our developer partners. The fund and the developer partner go and acquire the asset. Today, I am saying that the opportunity play for us is only that we are not compulsive investors. We have never been a compulsive investor because we do not have annual targets, because it's not my money. It's a fiduciary responsibility I'm carrying for the investor's money. So I need to be sure about, and I slightly say it is an opportunity, but one has to be an opportunistic also to determine where I should invest the money. Just because I want to be in resi play, I don't have to do a land acquisition all the time, though I love doing it. Because land acquisition is a very interesting play. You can come out with a theory of development, architecture, planning, etc. At the end, investors who's given me money is least bothered. He's saying at the end of the day, when are you going to return my money at what rate? That's the simplest question. You can give n number of data, you can play around with n number of data. You are a data master, but he is not really interested on any of the things. So at the end of the day, as a fund manager, my responsibility lies to the investor who has given me that penny to return that money back to him with the identified targeted return. So we clearly see in RESI recapitalization of the projects and the acquisition of value assets from the emerging because of the weak developers surrendering to the stronger developers is a big play. Just to give you things, year on year, we have been investing and divesting both at a record numbers. We are beating our annual figures every year for the last 3 years. We deployed close to 1,000 crores in the last year. That's the current financial year. The fund which was closed in March 23. So deployment is very strong. So appetite in the market is very good. The opportunity is very strong. So I think it is an exciting time to be there.
Thank you.
Just from a commercial asset point of view, there is an opportunistic play that will be coming up probably you'll see it over time, over maybe the year, next year, 2 years. Like Abhijit said, there's a lot of core that is being bought up and a lot of core that is being developed. But there is also a lot of core assets that are already existing, which are not up to the standard which is demanded by tenants today. Those buildings will require to go in for refurbishments. Those buildings will require to go in for sustainability standards if they want to retain their tenant profile. And that is where the opportunity will come, where you will be able to get an alpha on your investment when you go out and redevelop these buildings, or you go out and refurbish these buildings and bring them up to a standard where tenants who are demanding these standards would be in a position to come in and off-take space.
I think that is a perspective. Next one, Adarsh, since you are anyway holding the mic.
I want to actually answer that question.
Okay, please.
I thought the ones with the money should speak first. So the opportunity, at least for me, right, the one that stands out for the future is, I think, intergenerational housing. Because while most decisions when giving money is made empirically, the consumer is buying emotionally. No person makes any purchase decision empirically. We believe that we are logical, but we are the most emotional beings, right? So if the way that I see it in my mind, and we are doing this as well, is that a homeowner has different stakeholders in their life. There is a set of parents, there is the typical upper middle class purchaser, and his her children. Right? There are 3 generations. So in my mind, the future is any complex that can give and solve problems for these 3 generations. So like an intergenerational housing with 1 tower for elders, 1 tower for the kids and the grandkids, and then where we overlay services on top of this, right? Because today, most developers are just selling an asset with a clubhouse, saying my location is good, I have this brand, and I make a clubhouse with Italian marble and a big swimming pool or whatever, right? That's not catering to any emotion. But if you say, hey, you know what, if you want your house cleaned, if you want a meal, if you want to see a doctor, if you want to, develop a deeper bond with your children or your grandchildren, we are going to facilitate that. So you add like SaaS, you add RAS, real estate as a service, which is another layer. And then you create this housing society where you truly build a community as opposed to a piece of real estate. I think that is the future opportunity in my mind.
That's exciting. Please hold on to the mic. One more question starts with you then, which is the emerging segments of co-living and senior living. So how are you seeing investments come in that segment? What's been your experience on that? Happy to have others input later, but let the domain experts speak.
You should ask these guys why they're not giving money. But so again, right, it goes back to the fiduciary responsibility of funds and the risk-reward weightage. If there's something tired and tested and there's enough money to deploy it there, nobody wants to try anything new because there are so many people at the back end that needs to be answered to. So what we have seen is anything new, right? I do a whole bunch of alternate businesses because I'm very passionate about alternate businesses. But when we go and sit on a table to talk about alternate businesses with any traditional institution, the understanding and the risk-taking ability is not yet there. But like in every business, it's the first few people who start, show that there is money to be made, show that there is a problem to be solved, and then the investment follows. So some of us have to chug it out with our own equity till such time, institutions chase us.
So which segment of investors you are seeing more receptive to the idea?
So most certainly there are a whole set of people who are very open-minded. They're looking at it very seriously, right?
Are people like family offices
looking at it? Sorry?
Are people like family offices, setups like family offices?
Those are the easy ones, right? The ones that are actually very excited by it is the family office. But a family office is going to cut you 5-10 crores, right? That's not going to get the ball moving. The other set of people who are very interested in alternate is actually foreign investors. So domestic investors are having the conversation, But I think everybody is waiting for one or two people to make the first move, and then you will see a surge of investment. So alternate, I think if you look at the consultants, right? They are the ones, I don't know who's here from JLL, but JLL is building a big team for alternate. They're betting big on it. So they had a recent leadership summit, and they have built a full-fledged team. They think alternate is going to be bigger than traditional in the next decade. So we have a few people like that who are reaching out because we are one of the early people. We have funds in India who are trying to raise money for alternate assets. So they come back to us for data points. So definitely it's happening, and we will see it, in the next few years.
Just from a funding point of view, like you said, I don't think that there are too many foreign players who are ready to put money into India at the current time for co-living. I think one of the probable reasons is that the yields on residential real estate are extremely low. It is not like in mature markets where funds are actually building out multifamily tenanted buildings, where the yields can be upwards of 7, 8, 9%. And actually those are amongst the most popular REITs that are there in the market abroad. What is happening in India is with residential yields being in the vicinity of 2-3%, it's very difficult for someone to build a compelling conversation as to why you should be putting money into co-living in India. So I think it's only when the rental market matures in residential and you can get up to 8-9% kind of yields on rented residential, will you find a larger influx of capital coming into the country for that.
Just to add what Adarsh has said, the senior housing is a big play which will emerge in this country. But how it will pan out is we have to see. What we like is the first approach that the entire senior housing has taken is in the form of intergenerational homes. A same project having two different towers, I think that's a concept which is picked up in our own things. We have worked with Adarsh also in one of our projects. I think we see a very significant play coming up. But the challenge what happens in the senior housing, as rightly pointed out by Adarsh, is how do a fund manager come out with a underwriting? Okay, that is something we are trying to grapple with, but we are quite open-minded. I think we will see the opportunity as it comes. The other significant opportunity what we are seeing, which most of the fund managers have stayed away, is the redevelopment opportunity in Bombay. The MADA redevelopment opportunity is very large. Today 60% of the societies in the developments in Bombay are redevelopment projects. We see MADA redevelopment, slump redevelopment, I'm not sure whether people will put in money because of the complications involved in that, but MADA redevelopment will be another exciting, very strong opportunity which will emerge.
So I have heard some rumors in the private equity circles that they want to do something which has huge predictability of cash flows. As and when the yields go up, so it might be less of a real estate play and more of a predictability of high yield cash flows.
Just to add on to what others said and what other panelists said, yes, of course, I do believe that senior living is something that India really need to consider, because this is the concept. We need to see that actually when it comes to the senior living, this is something to do with our value system. What happens in India when it comes all these days? Okay, let us forget the current gen and millennials. Before millennial, the concept is okay, I'm raising my kids, and once they are well off, they are going to take care of me. Today, as I told that, there is a concept of global mobility. Nobody wants to stay at their native place, nor in metros, people want to travel. So now senior living is something that has become a necessary, I don't want to call it as an evil, but it is a necessary product. And here, I want actually how to create that sentiment. Today I have done some studies, because I am also an anthropologist and I keep studying it, and I have done some small studies, what's happening. Tamil Nadu has been a pioneer when it comes to the senior living. Because actually I believe that past 2 decades, 3 decades, in a small way they started creating a old age homes. The concept of hearing a old age home itself is kind of a shocker to any families. No, after this my mom or my dad, they are going to stay in their old age home. So slowly what that happens, we need to change that sentiment. Slowly that has changed now into a senior living. What I request Adarsh is, can we have actually some addition to it. Second one is what is senior living. Second one is who is senior. Can a 50 plus can be considered as a senior, and today there are people who want to get retired at even 45 also. What is that? The third thing what I want to tell is, which is emerging in Indian market, is managed residences. So it's an emerging market where actually if you see that now Taj is coming, Shangri-La is coming, beyond this there are people like Mercedes, BMW residences, they want to enter in Indian market as far the managed residences are concerned. Can we connect between these senior living and managed residences and come up with some new product where everybody will comfortably say that no, this is my planning. What is your actually future planning, not old age planning, future planning, I want to be there.
Sir, I think you described exactly what I said. This is what is intergenerational housing. And it is nothing but a serviced home, right? And nobody retires. First and foremost, the concept of retirement needs to change. I always give this example. You look at politicians, right? Nothing happens to those guys. Right? They live the longest from an aging perspective. They live the longest because if you look at what they do from an aging lens, they are physically active, they are mentally active, they are surrounded by people, they watch their health. So if any person does this and they have a sense of purpose, the biggest one, they have a sense of purpose. They wake up every morning, they know what they need to do or what their goal is. So we never tell anybody you should retire. Never. We don't use this word called retire. Because if a person truly retires, actually they stop living and eventually they die very fast. So it is very different.
Thank you very much. So now leaving it open for the audience, please fire us with some questions. It will be great.
We have been so efficient, no questions are coming.
That was a quick way to stop questions or what?
It is actually a provoking thing. I know it's a post-done session. Luckily, okay, we had one session before us.
That's a legal guy speaking. Yeah, so.
He always has a caveat.
The last word.
Being perceived by institutions, which are a popular ones, including funds, NBFCs, with respect to growth capital. At the end of the day, I'm sure you also must be seeking it out, and it's also necessary for any particular asset class to really flourish. So, what's your view on that?
So see, from the lens of it, of debt for real estate to put up a structure, I don't think there are any challenges. It's easy to get debt because you are put in the bucket as any other real estate developer. When it comes to equity, in residential itself, it doesn't exist. And senior living is a subset of residential. So it kind of follows the market norm. But when it comes to equity outside the country, there are opportunities. So if regular real estate starts to see a lot of equity, I don't see why senior living won't see a lot of equity. But it's kind of related to that. Currently, most of us have to fund it by debt.
Okay, yeah, looks like you've all been so clear in whatever you have shared that the audience feels that there is no reason to ask any further questions. So audience, for all the stalwarts on stage, let's give them a thunderous round of applause. And to thank you formally, I'm going to request Manisha Kapoor from IKEA to kindly come forward as you will clap and cheer for Manisha as she walks down the aisle to come forward to say a big thank you to all the 6 stalwarts, speakers and moderators on stage. So it's like Bangalore traffic, you have to take some deviations and come here, right? Yeah. For Manisha, please. Yeah, all of you. Thank you. Thank you and congratulations. Well done. Brilliant. Thank you. And thank you. Let's have a group snap, please, as all of us flock together, because we're all. Are you an architect by any chance? You're from the legal side, right? So thank you. All of you were spot on.